There is a new front in the US-China rivalry, at the center of which is the US dollar. China is betting against the dollar. It wants the American currency to fall. And for this, Chinese banks have been mobilized. They've been working on this mission since last year, apparently. They're making bets against the US dollar, and they have poured more than $100 billion into these bets. That's right. Chinese banks have bet more than $100 billion on the US currency to fall. So if it falls, these Chinese banks will make a profit. Bankers call this move a short. What is a short? Let me explain using an example. Say there's a small Chinese bank. It has 100 yuan. This bank decides to place bets against the US dollar. So with this 100 yuan, it goes to an American bank and strikes a deal. The Chinese bank lends 100 yuan to the American bank. In return, it borrows the same amount of money, but in the US dollars. Now, at the current exchange rate, today's rate, 100 yuan is worth about 14 US dollars. So now the Chinese bank has got 14 US dollars and the American bank has got 100 yuan. But this is a loan from the Chinese bank. So the exchange is done, the two banks shake hands, and they agreed to meet 1 year later. In this period, in this 1 year, the value of the dollar can go up or down. If the value falls, then the American bank will have to pay more to the Chinese bank. It will have to pay more than 100 yuan to reclaim its $14. So when the two meet again after 1 year, the Chinese bank will check the exchange rate. It will calculate the difference. And if the dollar has fallen, then the American bank will have to pay more. This, in a nutshell, is shorting. This is how traders short companies in the stock market. In a similar fashion, investors can place bets against currencies too, and banks use a special instrument for this. It's called a foreign exchange swap. Since last year, Chinese banks have been doing a lot of these swap transactions worth more than $100 billion according to one estimate. That's a huge sum. But why are the Chinese doing this? Is this some kind of currency warfare? Well, not exactly. It's more of a defensive strategy. China's central bank is the driving force behind these trades. It is using these short positions to defend the yuan. How does that work? You see, when a bank takes a short position, when it swaps the yuan for the dollar, this trade reduces the yuan circulation. Because when the yuan is swapped for the dollar, there are fewer yuans available for trading. The supply goes down. It makes the yuan scarce. And anything that's scarce, anything that's harder to get, usually costs more. That is what China wanted, to prop up its currency. Because the past few months have been tough for them. The Chinese currency has been losing value. In the month of June, it dropped to a 7-month low against the US dollar. And what triggered this fall? Two things. The US dollar is becoming stronger, and the Chinese economy is becoming weaker. This year, investors have pulled out billions of dollars from the Chinese market. All this has led to the weakening of the yuan. But instead of fixing its economy, China is resorting to the next best option, and that is pushing the US dollar down, and in the process hoping that the yuan recovers. This strategy has its own risks, though. If the dollar continues to strengthen, then Chinese banks will take losses. In fact, they've already lost billions. One estimate says that they've lost anywhere between $5 to $16 billion. But Beijing is not giving up. Instead, it's assembling more firepower. It is looking to mount a new challenge. This time, China is targeting Wall Street. It has ordered a merger between two state-backed brokerages, two brokerages in China. Together, they will create a $230 billion